Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Tuesday, August 6th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. I will jump right to this one here. Certainly, we opened below this, I call it a trend defining support area on Monday. We did not close below that range of 197.40 to 199.40. Those numbers were a little different actually on Monday. Those are Tuesday's levels. That as long as we do not close below 197.40, despite what we've seen over the last couple of weeks, and especially on Monday, this area can absorb selling not only through August, but even perhaps the rest of the year. Now, on the way up, this could be this week yet. If we close today above 199.40, that 222.23 former channel bottom in reach within 1 to 2 days. In fact, obviously there could be a scenario where we open above 199.40 on Tuesday and by the closing bell reach into the low 220s with the present volatility that we have right now. But on the way up, I don't know if I show 216 anywhere. I think I can rifle through some of these charts. That's not it, nor is that. There we are. 216, a 3/8 upside Fibonacci from the July high against the more recent low. I believe that is the right 3/8. I was going to say that also looks awful lightly 3/8 on the way down from April against July, but on the way up, this is a 3/8 Fibonacci. If we happen to, push open above 199.40, and we may, I think we could get strength right out of the gates. 204.90 in reach pretty quickly. That can give the market trouble initially at 204.90, pushing through 204.90, 216 even would be in reach today. That could be it for the day. That would be a significant rally in and of itself. And if we close today above 199.40, I would anticipate, the channel bottom that we have at 222.23 within a matter of days. 1 to 3 days, I think, is likely with presently heightened volatility. 222.23 is a rising channel bottom that goes back to the April low, and we have a newly formed descending channel top that is at 223.82. And so if this area were tested today, for instance, it just may contain buying for the week itself and through next week. Depending on volatility under other circumstances, that would be a 1 to 2 week break back into the upper 190s. In this environment, it could be within a matter of, within 2 or 3 days, we test 222.23, and 2 to 3 days after that, we fall back into the upper 190s. But I do think the upper 190s, 197.44 to 199.40, 199.74 on the weekly chart is a significant zone. We've obviously violated it on Monday, but on a closing by closing basis, which I think, which I know is the foundation of our system and most systems on a daily chart, it would be a settlement below 197.40 that would then clearly indicate longer term bearish continuation. But until then, as difficult as it is with this heightened volatility and the fact that we opened well below that area, we came back to it. I would urge you to watch the Triple Q. I don't know if we don't have a Triple Q chart on here. The Triple Q, I've been mentioning now for weeks here on Tesla occasionally, tested a 4.5-year channel top back in July, and it actually fell to a 2-year support structure on Monday that held nicely. We came off of it. So I think knowing where these levels are is important, but I digress. Let me just continue with the upside, that if we can close above 222.23 over the next week or two, which if over the next day or two would also involve this descending channel top, then I see meaningful gains as we continue really into September, October trade. I could construct a new channel top here that would be in the low 300 area pretty soon. But I'll just point to, once again, 329.21 as not out of the question if we were to close sooner than later back above the 222.23 former channel bottom. Until then, it may well contain buying through next week and we can fall away. Now for the downside, we've got 167.41 is this sort of double bottom, part of a congestive range that existed in May and then again in June. I don't expect to see that today. What we could see today, below 197.40, whether that's breaking or opening below 197.40, is 182.32. 182.32 we actually did test on Monday. It says trend line off these highs. We don't show it today, but just a simple trend line off these highs, 182.32 in reach today with an open below 197.40, a breaking or opening below 197.40. And if we close today below 197.40, I see that as the beginning of longer-term bearish continuation. Longer-term bearish continuation with 167.41 considered probably a 3 to 5 day target. And as we continue really into September trade, this could be by the end of September, 130.31 is indicated. Is a 1 to 2 month objective if we close today below 197.40. We're at a significant pivot point here in Tesla right now. We've obviously violated it on Monday, but we didn't close below it. And if we do close today below 197.40, 167.41 becomes a 3 to 5 day objective, could be realized within 1 to 2 days. And 130.41 becomes a 1 to 2 month objective, could be realized within 2 to 3 weeks with presently heightened volatility. Inversely, closing above 199.40, continued settlements inside or above this region allows buying pressures to build. Once again, expecting 222.23 within just a few days of closing above 199.40, and we could continue higher into the low 300 area. As long as we continue, if we can close the week, let me put it this way, above 199.74, this 329.91, 329.21 still in reach. Although I'm getting tired of talking about this as an objective because it is so off the mark right now with what's happening the last few weeks. This is the pivot point really through the rest of the year, I think. If we close below it, expect the 130s and dropping into the 120s in the next few days within a month or two. Until then, this could be our low as we move into later year. I think that pretty much rounds it out. I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. You might want to see that triple Q analysis. Definitely relevant with what's happening in these larger tech stocks. I'm going to leave it at that for Tuesday's Daily Triple Q Report, and you have a great day.